Hello, it's Ed Huck with Keller Williams Realty and the Ed Huck team, and I'm here to give you your quick March market update. So we're going to look at all of February's numbers, all regarding real estate. So let's dive into this. And it was an exciting month. Let's share some of this data with everybody. So your March 2023 update. I'm going to do this differently this month. So for those of you that just want the quickie highlights, I'm going to go over them real quick here in the next 2 or 3 minutes. For those of you that love to geek out with me with all the data, hang on, and that'll come at the end of this. So interest rates have started to stabilize. They're probably going to go up a little bit more unless the Fed can get inflation in check. So mortgage rates tend to follow inflation. As inflation goes up, mortgage rates goes up, and inflation is still going up. So we got to keep an eye on that. The thing to keep in mind there, though, is if you need to buy a home, don't let the rates hold you back from buying a home. Your history says rates will come back down and you can refinance. So I think we've got a lot of people maybe sitting in the sidelines really worried about the rates. And there's a saying in the industry right now, it's date the rate, marry the house. So don't let the rate hold you back from, I'm going to do another video about that too, that shows you the math on that. If you were to wait a couple years for the rates to come back down, how it's actually hurting you more financially than just going ahead and pulling the trigger now. So look for that video soon. It's still a hot market under $500,000. It's still a seller's market under $500,000. And because it was such a strong seller's market for the last few years, it's even with the number of homes starting to, it's taking a little bit longer to get your home sold. And with more homes coming on the market, it's still a strong seller's market. And even if we were to dump a whole bunch of more homes on the market, it's still going to be a seller's market under $500,000. If you start to look at the prices, say above $700,000, it's really starting to slow down. Inventory is up 30% compared to last year for homes that are priced over $700,000. Overall, because of that, there are more homes available to purchase this year than last year. And again, it is taking you overall a little bit longer to sell your house, about 9 more days to get your house sold. Again, if we were to look at the numbers over 700, it was closer to like 25 days extra to get your house sold. Interest rates. This is where we're going to start to go deep into the numbers. So if you want to hang on, please do so. And if you, please do so. Interest rates. This is interest rates over the last 23 years. So if you go all the way back to 2020, look at that. Interest rates were more than they are now. They were hovering around that 6% for a long time. And then they dipped after the financial crash that we all had, into these really low numbers. Now, as of earlier this week, they're about 6.65 for a 30-year fixed. Let's get into the trend graphics reports. This is where I love this stuff. So if you look at this graph, this is all of Cuyahoga County, Lorain County, Medina County, all mushed together. This includes all price ranges. When you look at here, if the blue line is new listings, the red line is pendings. So the month the home went under contract. Green is the number of homes available for sale. Dark green is the number of transfers that happened, number of solds. So the month they transferred. When you do a quick look at this, what I start to see is this light green bar is starting to outpace this dark green bar, which means we have more inventory available for buyers to purchase. When you go back and look at this year to date versus last year to date, the number of homes for sale to purchase is up 27% compared to last year. New listings is actually down about 11%. Transfers is down about 20%. The interesting thing to notice here, though, is pendings are up 1.3% from last year to date. So what actually happened is, and it's hard to see on here, but when interest rates first spiked in about August, a lot of buyers put the brakes on purchasing homes. Now that rates have started to stabilize, we're seeing a lot more buyers get back into the market, and we're starting to obviously put homes under contract because we're ahead of where we were last year. This is also interesting to look at: average price and median price. What's going on? Median sale price this versus last year is actually down 2.7%. Average sale price is actually down 3.4%. When you take a deeper dive at this, what it's telling us is that more expensive homes are not, I guess, more expensive homes are selling this year than last year. So that's why you're seeing this average go down more than the median go down. And then days on market. Average consecutive days on market this year versus last year, we're up 20%, which that sounds like a huge number. It's actually, and it is, but it's only 9 more days. So it's taking 9 more days this year to sell your house than it was last year. That's not to transfer title. That's 9 more days on the market. Months worth of inventory. This is what we look at when we try to figure out, is it a buyer's market or is it a seller's market? What you can see here, when interest rates spiked, it really started to drive the market back towards a neutral market. In realtor terms, anything between this 3 months worth of inventory and 6 months worth of inventory is a neutral market. So we've been at this historically strong seller's market for years. When interest rates spiked, things kind of popped up. What we're also seeing now is, and this is based on pending, so the month the house is under contract. Right now, we're tracking at about 1 month's worth of inventory, which is still a really, really strong seller's market. What is interesting, though, if you were to go back, and we can do this real quick, is if we were to take, and let's say homes over, say, 750, show you guys that real quick. Much different graph here. So you can see there's a lot more inventory of homes available, which is the light green bar, of homes over $750,000. And when you look at these graphs down at the bottom, these charts, the number of homes for sale over 750 is actually up 21% versus last year. The number of new listings in that price range is up 28%. The number of solds is down 25%. And the number of homes under contract over 750 is down 6%. So again, it's a little bit different market when you look at that price range. So if you want more information about your specific house, please feel free to reach out to me or your favorite Ed Huck team agent. We're here for you, and make sure you know these numbers. And if you're working with a realtor that doesn't know these numbers, you're not working with the right realtor. So make it a great week. Take care.